Devang Mehta also joining us on the show. Devang, if I had to ask you one stock which is probably going to return 170% in 2025, what comes to mind?
Thanks for having me on the show, Anisha. Yes, probably wouldn't be able to comment on individual businesses or stocks, but yes, if I can probably talk about a theme and which has sort of been our favorite this year as well. I think very clearly it is manufacturing slash engineering slash capex. I think, and if I can probably boil down a little bit into it, there are themes like power automation, there are themes like stamping and lamination. There are a lot of such allied themes where there are renewables, there are sort of power ancillaries. These are themes where you could probably find out a lot of mid and small size businesses also who are exhibiting both a robust revenue growth, earnings growth, and most importantly, most of these companies are also free cash flow generating companies. So my sense is that rather than being in the usual suspects or rather than always being in the crowded trade, there is always this type of themes and companies which are available, which are going to serve the next leg of India growth, be it semiconductor, be it power, be it ancillaries, or be it also the renewables. I think these are interesting sectors to be in. And a lot of companies, probably I think we are in the sweetest spot because we are seeing so many different sectors getting listed, so many different type of companies and flavors being exhibited in the market. At this point that probably you're spoiled for choice.
Well, exactly. And looking at the kind of additions within the IPO space, we are indeed spoiled for choice. But Devang, good afternoon. This is Shrishti also joining in. Help us with your take on the recent IPO listings. Any stock that still stands out, because we have seen great listing in 2024, be it Ola, be it Swiggy, even Hyundai Motors for the case. But any stock from the IPO world or one of the recent listings that is still looking attractive to you for the upcoming years?
I wouldn't comment again, as I said, on the in the individual, but in the last couple of years, I've seen so many good quality paper coming to the market. Yes, of course, will always have certain not so great companies also getting listed, but most of the companies which came to the market, maybe it was offer for sale, or maybe it was also the fresh IPO or the fresh proceedings that they are going to use for the expansion of the business. I think most of these companies came up with decent IPOs, and they got good subscriptions. They left something on the table for the investors, and I think good amount of money was made. Now, coming back to the point, yes, I think there are interesting spaces like Swiggy, for example, right? It's a perfect duopoly market where there is Zomato, where there is Swiggy. Zomato post listing had not so great performance, but yes, with the numbers coming back, with the with I think the usage getting up, with whatever is the business model, I think most of these companies will do very well. As I said, the restaurant business wanted aggregators, and there is where the intermediaries or the aggregator spaces also come into the picture. So yes, we like Swiggy type of businesses. If I say they are on the hunting list, probably there are companies like JSW Infra or even Inox India, of course not recent listing, but listed in the last 2-3 years. Which are also extremely important and critical for India's growth, port infrastructure, as well as something into cryogenic equipments. These are type of companies which India would have never seen listing of, because these are companies that operate in a different type of a market or a different type of a logistic type of infra. So I think these are companies one should look at, but of course you can't get carried away and subscribe to anything and everything. But more or less, I think the quality of paper which is coming into the market is good.
Quality of paper has improved quite a bit. In fact, this is something that we discussed with, Mohit as well of ITI. He joined us earlier in the day. Hear out what he has to say about 2025 and the IPO rush.
The momentum on larger issues will continue. Of course, valuations will, in my opinion, take a little bit of a beating because the sentiment's not all that upbeat as what it was, say, in 2024. We had a host of events which made that sentiment positive. But my sense is, despite the base effect, we should around about match the same numbers, if not go higher by a few percentage points. This particular trend shift, right, because we are a very young country, our consumption patterns have fundamentally shifted a lot over the last 5-7 years, and they'll continue changing. Right, by 2030, the face of how India's Nifty 50 looks like will be very, very different. The constitution will change. If you're an old school business, unwilling to innovate, unwilling to adopt technology, to go to your consumer in a different manner, there's a very high chance you will become obsolete in the decade up ahead.
All right, so that was Mohit Gulati's takes on some of these recent listing and the IPO rush. But coming back to you, Devang, you did highlight what is looking interesting to you at this point in time, some of the sectors there. But help us with your understanding, like what is not looking so great for 2025?
I think again, there also I'll probably classify and I take the conversation which I just heard your recent bite. I think very importantly, it is a time to sort of change, and that's what we all know. The change is the only constant, and probably for people who just revisit the old theories, it's time to sort of not only innovate but understand where the profit pool is shifting. Most importantly, yes, I always say this, that India's market cap is roughly around 410, 420 lakh crore as we talk. And there are only three companies which are about 10 lakh crores of market cap, and there are only nine companies from 5 lakh crore to 10 lakh crore, and there are around 79 companies from 1 lakh to 5 lakh crore. If you leave alone this 95 companies, there are n number of companies which are listed below 1 lakh crore. That is where the sweet spot is. And there are large caps, there are mid caps, there are small caps also. Also over there, if you look at the categorization, there is around 100 lakh crores of BFSI. There is around 40-45 lakh crores of IT. These are the traditional companies where a lot of money is being made. If you ask me, still can the traditional banks and the traditional IT players make 10, 12, 13% per annum? Yes, answer is yes. But if you probably want that where the profit pools are shifting, it is in a lot of capex, a lot of manufacturing industries, a lot of consumption related universe. I'm not talking non-discretionary consumption right now, but a lot of discretionary consumption like hotels or aviation or the food aggregators. I think a lot of money is probably chasing this type of businesses, and also profits are shifting over there. So I think probably the construct of the benchmark indices over the next 3-5 years will see a sea change from non-conventional, from conventional ones rather, to some of the non-conventional ones, and those non-conventional ones at that point would be sort of conventional ones. So yes, cutting the long story short, a lot of this innovative companies I talked about, one should be over there rather than being in the normal run of the mill type of businesses.
Okay, point taken. Look for niche businesses. Hold that thought, gentlemen. Devang, a word on IT pack. Just ahead of the earnings season, how should one place themselves? Because on one hand, yes, things seem to be looking positive, but this quarter is again going to be weak because of furloughs, etc.
Yes, if you look at as a quarter to quarter type of an exercise, this quarter wouldn't serve any as such a great purpose. But yes, revising the guidelines which we saw by Accenture, probably by a bit, augurs a little well for this sector. I think the sector saw multiple headwinds last 2-3 years, and it just seem to have come out of the blues. I think typically for investors who probably are targeting anywhere between 10 to 15% type of return, these are still interesting stories ahead. With global recovery, with global rates probably going down, which we already seen, though the narrative seems to be it will come down slowly. I think there are interesting times ahead with the rise in discretionary consumption spends across the globe. I think Indian IT surely benefits. Large cap companies for people probably who want a, as I said, the type of returns. But somebody who probably wants a little more type of returns, something in tech, something in EMS, this would serve a bit of more purpose. Companies like L&T Technology Services or Tata LXI, just getting certain names, not recommending LTTS, which is more a tech or a AI or a EMS or rather a ER&D type of business. I think this type of businesses would do better than the usual traditional IT stuff.
Devang, before we let you go, a word when it comes to the insurance sector, because finally things were looking up after all the regulatory hurdles and the changes that had happened, and we all keep talking about the underpenetration that is there in the sector. But time and again, the moment it starts consolidating, there's an overhang which comes yet again, and that's exactly how it's playing out now with GST.
I think yes, you made the right point that insurance always probably starts a little ahead of the times, and given the valuations at which certain companies are, people start finding comfort that this is one space which has sort of not performed over the last 2-3 years, and it's in terms of your valuation, this seems cheaper. But somebody who has a 2 to 3 year horizon probably can look at this type of business. For people who are a little bit ahead of the I think people who are ahead of times, and 6 months, 1 year, if somebody wants to look at that type of returns, there is wealth management space, there is broking space, there is AMC. These are all companies which probably are gaining in terms of revenue. A lot of these companies, large companies, are also gaining in terms of their market share. Whereas insurance is lagging in terms of gaining market share as well. A lot of companies, there is a sort of perfect competition. But as I said, few companies, somebody has the conviction for the next 2-3 years. Yes, this space looks interesting and it looks undervalued if you try and compare it to the peers in the same industry, but in sort of different timelines.
All right, but Devang, also help us with your take on the metal pack as well, because 2024 has been a bit of an interesting year because there was a whole talking point related to the China reopening as well as resurgence over there. And even back home, what we are seeing is that the government is quite active. And even today, there's a news flow that they are looking keenly on the import duty structure that could actually benefit these metal counters. But since it's a very news heavy sector, Devang, but looking at the kind of valuations and the stocks that are trading, what's your overall sense on the metal pack?
Ideally, the domestic-centric story is where I am pretty bullish, and honestly, we place our bets more over there. The type of companies that I talked about in the capex and the consumption universe, where you don't have large dependency on what is going to happen globally. Your price linkages are more or less sort of linked with India. Rather than the other parts of the world, which you probably it's difficult to track. Ideally, yes, metals, as I said, is more a theme because while the world grows very well and also India goes on to the growth ambit and China probably mixed type of signals. But ideally, this sector would do well for the next 1 year. But as I said, there is again so many choices available over there that I'm not sort of equipped to buy which company to buy. So we buy more or less, I can say, we like certain refractories which are always used when you sort of produce metals. We like certain mining consumables. These are companies which are sort of allied. These are proxy plays to play metals. Metals is an obvious play which all of them would play, but we would like to play the proxy plays related to metals rather than the direct metal play itself.
Proxy plays are better placed. Devang, we let you go on that note. But Naresh, just before I let you...
If you like this video, then like, share and subscribe to ET Now.